接下来呢，我们要再来进行我们下一场的高峰会，也就是我们的论坛。那么这一场论坛呢，一样待会儿会特别邀请6位精英啊到台上，能跟大家一同来分享。这一场论坛主要来探讨的就是区块链产业的创投们，我们到底要如何来创造这些机会，以及同时要如何来管理风险呢？ Now we're going to move on to our very next panel discussion of today. The topic for this panel discussion is our great expectations: how blockchain VCs identify opportunities and at the same time manage risk. Now, if I call your name, can you please also step on to the stage? First of all, I would like to welcome the moderator of this panel discussion, Richard Wayne, DraperDragon Fund Partner. Welcome, Richard. Round of applause, please. Thank you. Next, I'm going to welcome Alexander Shogun, GRUPPA Company Familia founder and CEO. Welcome, Alexander. Again, Jack Lee, HCM Founding Managing Partner. Welcome again, Jack. Next, let us welcome William Baubin, SOSV General Partner. Welcome. May we also welcome Jamie Lin, AppWorks Chairman and Partner Taiwan Mobile President. Welcome, and last but not least, Patrick Chang, Samsung Next Ventures Early Stage Venture Investor. Welcome, Patrick. All right, thank you all. Now we're all set, and I'm going to move it on and pass it on to our moderator, Richard.
Hi, thank you. Thank you, everybody. I guess we are all very excited to be here to try to show you, well, you miss me, okay? Okay, anyhow. So, yeah, I guess we have a tiny minute, maybe just 40 or 50 minutes. So I guess each of us, we should introduce ourselves. Just try to give some background about yourself or your institution or even your portfolio. So because we all come from the investment field, right? So to let all the audience have a better understanding about us. Okay, so let's start from you, Alexander.
Ni hao. Alexander Shulgin. I'm based in Moscow. 10% of my time in my country and just all this travel came from background from entertainment industry. Then I go to media and then digital media and then digital investment and now venture capital. I'm partner in 2 venture funds, but mostly invest directly my own money. 123 investments, 7 IPO. We exit. We prepare the 8 IPO later this year, and some institutional exit also. We are largest mining. This time crypto mining companies, and we have a lot of leading company in fintech and others, and only 2 failed companies. Thanks.
Hi, everyone. Yeah, I was here 1 hour ago. So again, Jack Lee. My Chinese name again, Li Renjie. I'm a Taiwanese. I grew up in Taiwan, and then I live in mainland China for the last about 12 years. And in the recent 2 years, I split my time between China and the San Francisco Bay Area, US. And for the company, HCM, the venture capital arm, I founded. We invest in the recent 3 years, we invest in more on the blockchain area. So the portfolio company we have is including like a digital currency group, DCG, and like Galaxy Digital, and like Abra, and like a Cambridge blockchain, and most recently like a Figure, and which is the blockchain called Provenance hash token as well. What else? Anyway, this is a few examples. So we've been very intensive in blockchain investment because we believe this will be the future, and then we like to through the investment to help to build the ecosystem. So we like to choose those key players in the can help foster the ecosystem to grow.
Hi, William Bean. I'm a general partner at SOSV. So we invest through accelerators, and I run MOX, which is the first international accelerator to start up here in Taiwan almost 4 years ago, and China Accelerator, which is the first accelerator to start in Asia almost 10 years ago. We invest in a number of different sectors, started investing in crypto and blockchain in 2015. I've done about 40 investments in blockchain, 5 more crypto. Very happy to have accelerated BitMEX and helped Andy to bring them here to this conference. So very happy to support Taiwan, and it's been great for us being the only VC investor in BitMEX.
Jamie Lin. I wear 2 hats. I think I'm mainly on this stage for one of my hats, which is chairman and partner of AppWorks. So AppWorks is one of the largest startup accelerator in Greater Southeast Asia, which is Taiwan plus Southeast Asia. We have been around for almost 10 years. We just graduated our 18th batch of startups. Of our startups together there are 351 active startups doing around $3 billion in revenue per year, and are valued together at $4 billion, both of which are growing at high double digits, low triple digits year over year. We've been shifting our focus to AI/blockchain over the past year. We have accelerated more than 30 blockchain startups. So one of the co-organizers of this event, BlockTempo, one of the biggest exchanges in Taiwan, BitoEX, are 2 of the examples of our alumni startups are doing well in the blockchain space. We are also a VC. We've managed 3 funds at around $150 million. We have invested in around 50 startups, and 3 of them are working on blockchain sort of related ideas. Yeah, that's a quick overview of myself.
I'm Patrick. I'm also Taiwanese, but I'm based in the Bay Area in San Francisco. So I'm part of Samsung Next, and we are the early stage venture fund at Samsung, focused on C through Series B investments. So I lead all our blockchain investment area. But our group, we write checks anywhere from $250K to $3 million. We have about 80 companies in our portfolio now. We're focused primarily on deep tech, and the investments that we make are all about innovation. And so we only do software and services. But for our blockchain investments, we have quite a number of blockchain investments. We've been investing since 2014. But a few of our companies that we can talk about publicly, one of them is a company called Filament, which is doing decentralized IoT. We're also invested in Dapper Labs. And we have a blockchain wallet, and of course, we're also doing some stuff in blockchain as a service, a company called Alchemy. But one of the major things that Samsung, our group does, is we like to say that we're like the business development team for our portfolio companies at Samsung. And right now, blockchain is a huge area for Samsung. On our S10 devices, we announced a blockchain wallet, key store, and they're looking for a ton of partners.
Okay, thank you, Patrick. Okay, so I give some introduction about myself too. My name is Richard Wang, come from the DraperDragon fund. Actually, we are one of the fund under Team Draper in Silicon Valley. So actually, we are quite regular and normal venture capital. We do the venture capital things, early stages especially, about more than 15 years in China. So though I'm Taiwanese, but based in Shanghai for many, many years. So that's about us. We not just focus on the early stage or the traditional deals, but also blockchain. So today we are trying to discuss so-called blockchain VC or the traditional one, if we can say so. I'm not quite sure if we want to say that way, to separate that way. But anyhow, I guess that most of us actually invest in the blockchain area, right? So if you like, or how do you see the difference? How do you see the difference between the so-called blockchain VC or traditional one, or how you like to transform your institution into more fintech or more blockchain area investment point of view. Okay, so maybe that's from Patrick.
Sure. Yeah, I can kick this off. Yeah, I actually view blockchain investing and traditional venture quite different. So I've been doing venture for about 15 years now, and only, I guess, 5 years now I've been looking at blockchain. Blockchain is still a very early technology, obviously, and where I kind of view blockchain is the risk profile of it is, in traditional venture, you kind of have early stage risk profiles in terms of like market, technology, or team. You can pick like 2 of them where there's risky. In blockchain, there's really all 3 of them. It's super early, so you have a ton of market risk. Technology is a little immature, and then you have a big team risk. So for us, that's how you kind of separate blockchain investing from kind of traditional venture investing.
Jamie.
Well, so I was an entrepreneur before starting AppWorks, right? So when we started AppWorks, really we wanted to build an institution that is by founders, for founders. So we wanted to help founders that want to eventually create a great organization in the long term. And I think investing is just a way to help the founder build that great organization, at the same time providing adequate return to the LPs. So I think really I don't see a big difference between sort of traditional investors and blockchain investors, because at the end of the day, you're just trying to create a situation in the mid to long run that is a triple win situation. It's just the tools that you've been using might be different. So a traditional VC might be doing equity investment. A newer type of VC might be doing convertible note investment. And an even newer type of VC might be doing an equity convertible into coin, or a coin convertible into equity type of investment. But at the end of the day, I think it's just instruments that you're using to help fund an entrepreneur's venture, and in the end, trying to create sort of a win for both the entrepreneur and your LP investors. So I don't see a big difference. Yes, there's a lot of builds and whistles that we have built around equity investment because of the over the past 3-4 decades, during which people are doing VC investment. There's a lot of frauds going on. So we have built all these bells and whistles to align both the entrepreneur and VC's interests. And I think in the sort of coin space, most of the bells and whistles hasn't been built, but one can safely expect over the past few years, all the same bells and whistles will be built.
Just really quickly, I mean, I agree with Patrick and to some extent Jamie. So if you look in recently, you have venture capital, and it's not so much venture, it's mostly capital. So VCs have become more like bankers. They're financial engineers, as opposed to really, taking risk. So, investing in blockchain is a little bit, or crypto is a little bit like investing in the late 90s, where you had a huge amount of risk. So where we position is, we take a bunch of risk, and then through our accelerators, through our services, through Mox and China Accelerator, we try and take the risk out. But investing in the crypto and blockchain area is a lot like VC was a long time ago, where it was very early stage, and you're going in with a triple risk.
Hi, I think I have a little bit different view on this. When we talk about something investment, just like a few years ago, there's the O2O, there's the wearable, there's the autonomous driving, whatever. I think this is what we call it's just, some people put also like IoT recently into AI, a category. And then some people call it blockchain investment. But I believe 10 years from now, maybe there's no blockchain, what we call the investment in blockchain. Just like nowadays, no one say investment in internet. But back to 2000 or before the bubble, we categorize internet investment and traditional investment, something like that. So it's number one. But number two is the most important is whether this kind of blockchain technology will really thrive, will really change the world, change our economy, change how people work, or even change the corporate world to become more and more decentralized, network, and then community-driven. Okay, this is the key. My belief is blockchain will. For those one I mentioned before, even, I mean, like what I'm talking about, there's a few technology in the last decade then people mention, and it's hot and then it's gone. But I believe blockchain is a different thing. But now we like to call it blockchain investment is because we want to categorize it as this is okay with the blockchain technology. But eventually, blockchain will be one piece of the layer, the technology layer, because the way it, I mean, it kind of a peer-to-peer, this kind of a network versus the centralized database, just like those internet big company doing, okay? This is fundamentally different. And then fundamentally, I mean, eventually, if this will become, as I say, more and more use case, more and more adoption, then there will be a really something big. And then that's why now people call it Internet of Value to be, right? And then maybe everything is become, there's some blockchain inherent, but maybe we won't call it blockchain again in the longer day. Sorry, second important comment is related to the equity investment versus token investment. Remember, Jamie talked about the convertible thing. Yeah, eventually, now, you know, last year, I was calling ourselves, say, okay, whether you want to do an equity fund or do the token fund, but now I found it's a little bit funny. I won't say this again. I think in the future, like for example, there's a more and more regulation come out with, like now US, you can do a Reg D, Reg S, or Reg A plus, or Reg, yeah, anyway. There's a lot of regulation will change or can be adopted for this kind of token investment, just like the Taiwan, STO, etc. So in the future, I think the token investment will be just like the venture capital now investing in convertible. So that's just one kind of instrument to nominate the underlying asset or underlying economy. Become, like say, I own one piece of the 1 billion token, then I own one of the billion of the whole economy. And that's it, just like equity is a residual value of the company, right? It's the same. So I think in the future, we won't categorize as a token investment or equity investment. That's my view.
The venture capitalism, the venture funds, is dead. So we are on the stage like maybe last patriarch or kind of walking deads. The VC, a VC fund, it's a third party in modern decentralized world. Why do we need a third party if the technology, as a called Bitcoin blockchain, by the nature, disrupts third parties? So we do not need to be disrupted. We have to lead it. So what is the two ideas is? So, and it makes difference, the new way of investments according of the old way of venture capitalism. One of my portfolio company for traders, it's called TradingView. If you are traders, I think you use it because 80% of traders uses. Millions of traders every day come. So they follow the leaders, and the leaders just advise by doing it, opinion market, and this model works fantastically. So all ventures which now create this venture fund aggregate 150, 250, 500 million US dollars and try to live for this 3% and success fee will became just advisors, but not advisors like this fucking ICO, but advisors when they will do advice by doing it. So this model will be working well. Just last week, I flew to Kazakhstan to talk to the government, and I spoke with the Prime Minister, because Kazakhstan now make a good regulation for crypto. If you don't know it, the best regulation for this moment. It's still far for regulatory, but best regulation. And I told that, look, the crowdfunding, if you call ICO the crowdfunding, is a good idea, but it was a lot of scam, naive scam, crazy people just take money and then, you know, buy a Ferrari or whatever. So, but we need to support this idea. So please, let's make some board of experts who care about reputation. Maybe 20 people of experts. And let's try to go to a new model of crowdfunding, but which this expert will say, okay, this is not fake, this is not false, this is not scam, and with small money like a $3, $5, $10 million, not $300 million. And this expert will be kind of advisors, but not advisor, but they will be also put a little bit money on it. And then 20% we will put on the hedge. If something will fail, this escrow will go to support this failure, so people don't have to fail. The second, we just spoke with the huge, largest investment US company, just huge. They want to do it also, these things, but to make a pro crowdfunding. So not crowdfunding when your grandma bring last $1,000 and then they have no money, but for pro crowdfunding, so professional licenses crowdfunding. And then this model can be like the future of venture, but people have to do their own venture funding, not like a fund who manage some money. The software can do it much more better, but the venture will do it the future of venture capitalism, it's when you by yourself doing and leading and show to the people your decision and became responsible personally for your economic of reputation.
Okay, I guess the audience want to know how we do the investment in this field specifically. But I guess investment is investment. Itself is looking for the profit, looking for the return, no matter it's equity or a token. Equity is under definition of some kind of legal or regulation. But I guess the token deal is quite different, right? Because there's no line to say it's early stage or late stage, for example. And the token deal has no such kind of regulation today, okay, in most of cases. So I'd like to check with all of you, right? Say, what's the difference then when you deal with a token deal, okay? What's your, say, strategy or your investment methodology, right? What would be the difference when you see the traditional equity deal and also or a token deal? Let's start again from Patrick.
Oh, start for me? Sure. So for us, it's kind of interesting because when we looked at token deals, when it was all the hype in like 2017, you know, we almost had a lot of FOMO because we couldn't move fast enough, especially as a conglomerate like Samsung. Even though we're a fund with a single LP, it's still kind of frowned upon. So a lot of the companies that we were investing in, we couldn't move quick enough, and we couldn't adapt to the changes in investing in token. But luckily for us, like we invested in a bunch of companies early in their equity round that eventually raised the token later. So we end up getting kind of like dividend payouts in token from our early stage investments. But as the market shifted a little bit to today, what we notice is there's a lot of companies out there these days doing like reverse ICOs. You know, they raise an ICO and eventually now they can't do more funding, so they're going back to traditional equity, and then kind of saying that their ICOs are more of like a marketing ecosystem play, and now they're raising equity funding for the company. But yeah, so for us, we don't outright buy tokens. But we still view, when we make investments, we want to see the fundamental ability of the company. And as deep tech investors, we look to see if they're actually building technology. But what's also interesting is when you differentiate from like early stage and late stage, a lot of the companies that were raising tokens back in the day were just based on all on white papers, based on promises and that kind of stuff. And 2 years later, there's no mainnet yet. They're still building and all that kind of stuff. So it's really interesting. All of them really are not just early stagers, pre-early stage, I guess.
Yeah, I have to agree with most of the things Patrick said, and I just want to add that at the end of the day, these are instruments, right? So it really depends on what kind of endeavor the founder or the founding team is undertaking, and what kind of duration it might take them to undertake that endeavor, and you design the right funding instrument to make sure that the investors' interests are aligned with the founding team's interests, right? So when it comes to, say, utility token, right? So oftentimes, utility tokens are faster to ICO, or to be listed on the exchange. But if you want the platform or the service to be successful, then it's almost by default the prices of the utility token cannot be too high. Otherwise, the entry barrier for the users to use the utility would be high. So at that point, oftentimes what we see is investors, sort of utility token investors' interests are not aligned with the company's interests. So for the company to be success, you almost want the utility token to be cheaper so that people will use the utility. So if at that point, it oftentimes doesn't make sense for the investors to hold the utility token. When it comes to security tokens, on the other hand, it's characteristics are almost the same as equity. It's just some of the bells and whistles are not built in or not required by the regulator. So when you invest in security tokens, then as an investor, some of your sort of rare case interests are not protected. So we've seen a few cases where when a team raises from sort of some of the offerings, and in the end, they decided to close shop and just take the money away. And there's not too much you can do as a security token or a security-like token investor to protect your interests when things like that happen. So, throughout sort of the history of investing, people have created different kinds of instruments. And I think at the end of the day, as an investor, it's really I think the key is really in picking the right instrument for that particular case, and so that the founders and the investors' interests are as aligned as they can be.
Yeah, I think first thing is that when we invest, as long as when the founders make money, the investors make money. When the founders don't make any money, the investors don't make any money. As long as we're both on the same sort of side, then things will work out. The challenge is when one group makes money and the other group doesn't make money. When the investors are making money but the founders don't, that's a bad thing. The second thing is, it's startup. They're hopefully there to solve a problem, and to build a solution to solve that problem. And when you have your entire team spending 80 to 90 to sometimes 100% of their time on PR and fundraising, then that's a red flag, because that's time away from actually solving that problem. So we tend to, we think that fundraising is important, but it's not the only thing that matters. So you still need to build that solution to the problem. And then the final thing is that it's going to take a long time. We're a 10+3 fund, 13 years. We're very long term. But we also need to have a return over that long period of time. If we have a saying, bulls make money, bears make money, but pigs get slaughtered. So don't be a pig, okay? People who are really greedy tend to get killed.
Your question is about how to evaluate token, right? versus equity.
Strategy will be different. Your investment strategy or methodology will be different when you deal with a token deal.
Yeah, because many token project is the issue at before maybe they have a product or they have something launch, right? Versus like an angel fund, right? Equity raise, then there's a seed money, that's the Series A, B, C. That's the difference. So I think still to look at how the same, like you say, right? The investment is for the return, right? For token, since this is a kind of a model, right? Because usually token is the issue. Let's say totally that's how many tokens supply, right? Although maybe it will be released later, but it's already predefined, 1 billion, 10 billion, 100 billion, for example. Then, so we have to look at the future potential usage of the token, right? What kind of application or what kind of use case can be used for the token, right? Can use to, for example, like this morning, perfect example, BNB, right? Then you know, then when you own the token, you can use it to trade, use it to reward, use it to whatever to earn, right? To help promote the whole ecosystem of a Binance, right? Same thing. So we gotta look at I think usually the most important the evaluate token versus traditional equity is the velocity, right? The velocity of the token, which means how intensive the token can be used in the future, and then discount it back, just like a DCF, right? Discount it back the cash flow as of today. And then of course you gotta evaluate whether the token will issue additional token or additional dividends, versus maybe some token like a BNB will be burned every quarter, something like that. So that will be kind of the one token will be more valuable, for example. So I think this should be the kind of a different approach than the traditional equity, which I don't need to rephrase here again. Yeah.
My strategy about investment in token or equity. Equity, yes. And tokens, zero strategy. And why? I can tell you two things. Of course, I was participate in the few token offering, but only by certain criteria. So I think it was 12 cases. The company have to be in the market at least 5 years. They have to be cash positive and good cash positive by size. So from 15 million US dollars valuation company to 4 billion euro valuation company, I was participate. But this was tokens, let's say corporate tokens. They use tokens only inside their business, which is exist and growing business. And we found that it's not so much different between, and thanks God the company still exists and everything is okay. But we found that it's not so much difference than it's from airline miles or points from the hotel. And it's difficult to go to the market and try to sell and sell and play and speculate. But we are investors, we are not speculation. We don't want to invest and then sell like Forex. And we have this experience, it's nice, we're not hurt, no one. So we learn about it, but why we are not invest, or I'm not invest. I think you heard this fantastic speech by Nouriel Roubini, and I agree with 99% with him, because he absolutely right for this moment. And if you will think about the 3-5 years from now, maybe situation will change, but also maybe will change in the models. Maybe it will be not ICO security token or any other token. Maybe it will be different things. In theory, the blockchain will, of course, they have something where you can do the same mechanism, but maybe it will be another things. We will have to wait for standardization, and then regulatory about standards. Because if you want to make regulation, you need to make regulation of some things. So you need to first create standards. And everything is have standardization. So let's wait 1 year. I told myself, let's wait 1 year more, 2020. We will see the standard, and then we will make it happen. In 1993, I was 29 years old, and I was absolutely remember how TCP was chosen as a standard. There was 7 other protocols, and TCP was not best, but it was chosen as a standard. And then internet was flying. WW, email, and all other application. So our technology, fantastic technology, decentralized technology, blockchain, will wait for this exciting time.
Yes, I guess we all know about equity deal very well, right? Because we come from a VC world. But if we talk about a token deal, I guess the philosophy is going to be a little bit different. The people back to 2 years ago, maybe people also said that these things ICO going to change the VC industry, something like that. But I guess as William just mentioned, right, we are smart money, right? So venture capital looking for the venture, looking for the risk. And so Patrick, just give us a very give us a very quick answer. How do you handle the risk for a token deal?
How do we handle the risk?
And the risk, right? What's your risk management philosophy, maybe?
Well, I mean, I guess my answer would be really short, because just because we don't invest in tokens straight out, we don't manage the risk there, because you have to think about the pros and cons of token and equity. For us, I don't want to take up too much time, but in token, it's the liquidity. You can be out of it, much quicker than investing in equity. But in equity, as a venture investor, we have more influence, we have more control, and that kind of stuff.
Well, just invest in the best founders. That's your best hedge against risks. So I think as a VC fund, you're just shooting for 30% hit rate, and hopefully most of the hits are 10x returns. Then you can return a 3x fund, right? So I think one should safely expect most of your investments are gonna fail. But if you always back the best founders, then they're gonna help you navigate through all the difficult times.
Yeah, so we take a lot of risk. We go in quite early, but we de-risk the investment by working our asses off. So we actually live with our founders for 6 months, working with them side by side, weekly board meetings. We have 330 mentors that help out, and we try and help the companies get from where they're going to where they want to go within that 6-month period of time, and that helps take the risk out. So we have many companies die, right? But about 60% raise money. Not that raising money is your goal, but it's pretty damn hard, especially with cross-border businesses or internet businesses, to raise money unless you have traction. Now, on blockchain, the companies are a little bit earlier, but we still try and get traction in the form of pilots or in the form of partnerships, not with other crypto companies, but with more traditional industry companies. So we take the risk out by working hard. And it's usually work hard first, raise money second, as opposed to raise money first, then figure out what to do with it.
I think the biggest risk, if based on the previous ICO model, is that the founder raised too much money. And then I think for whoever, right, if you're just 20-something years old and a few founder, you raise 50 million, will you still continue to work hard? I think that's the biggest risk.
We had some founders that raised 15 million and forgot to hedge.
Yeah, so I think in the future, this kind of thing won't happen again, right? And maybe there's a better regulation, better custody model, whatever. Or
Every 20 years it happens.
Yeah. Agree. Like
2040, something similar will happen again.
Yes, so I think beyond that, if this kind of thing can be mitigated, I think it will. And then still you're back to look at just like a traditional VC, you look at every founder, what kind of, right? The people is the team is the most important. And also not only the technology, but also how they really can drive the right business model in the kind of regardless of which industry, in what kind of a competitive arena it can really break through, and then what kind of use case it can really bring it to use, right, to scale. I think that's the most important. So the conclusion is still the team, and also the right business model, and with the, of course, good technology. But I think technology can be improved gradually, or maybe a little bit later. But however, I think the most important is the people, and it was the right business model.
Short question, short answer. I invest mostly my own money. If it's we manage another investor's money, we cannot make risk. So we don't invest in murky waters. We not invest in unregulated things. We invest in everything which we trust and believe. Why? Because we invest in any new company which make a synergy with existing 88 companies in portfolio. So if company have a little bit shaken, so other company who have a synergy with this company will help to survive. That's why we do not have on failure. Thanks.
Okay, actually, I do have one more last questions. Okay, so blockchain actually is quite broad concept, right? So as an investor, any specific sector that your fund or yourself are interested or focus on, and why? Patrick?
I'm sorry. Not good. So for us, we kind of look at it on the technology stack, and the areas that we're most interested in, not so much on the verticals, but for example, like the infrastructure layer, peer-to-peer networking, name services, anything that is kind of creating the actual decentralized internet. And then the other areas that we're looking at is a lot of the platform as a service layer, but not anything in kind of the DApp world is something that we're not that interested in.
Again, I'm just interested in investing in the best founders. Whatever they want to build, we want to help them.
Yeah, so we're pretty traditional. We look at where is there a problem, and is there a solution for it? And there's been a lot of problems out there that couldn't be solved with traditional technology. But when you add blockchain, you bring security, trust, transparency. You can actually get a much better solution to that problem. So we're focused there, and we are in a lot of traditional industries. So we're bringing blockchain into health, to logistics, transportation, manufacturing, a lot of traditional boring stuff that makes money.
Just following my previous statement for the business model, and also I think nowadays for blockchain, I would like to look at top down. The top is being facing the consumer, facing the user, facing the enterprise. So it will be more on the application layer. I think this is more important than, let's say, you have a great technology, you can do 1 million, I don't know, or 10,000 TPS, or you can do whatever strong security, but still, this technology cannot be used to improve the daily life of a human being or the enterprise solution, right? Then, so gradually, then the protocol, the infrastructure, this layer, this more infrastructure layer will be more and more important. When there's a more and more application by using this kind of blockchain technology, this kind of decentralized model, be adopt, right? And then it will be important. And also, we like to look at the other element. For example, like identity. We've been investing in the identity company. I just mentioned earlier, Cambridge Blockchain. Because why we believe identity is so important? Because we think this is a very important building block to fulfill the future decentralized world, right? If without a identity, this kind of decentralized identity in blockchain, how can we build a future decentralized world, right? How can we build a peer-to-peer transaction without a right identity? For example, so this kind of, I would call it utility, or maybe in the future, like a decentralized storage, etc. That will be more on the utility function. I think it's also important to build, to invest.
We are largest mining company. We mine crypto, Bitcoin, but we're preparing for data mining, for data hashing, for computing processing. We're preparing for smart cities, we're preparing for Internet of Things, we're preparing for industrial Internet of Things, for drones, autonomous cars, for every now smart future. It will need a lot of computing power, computing hashing. And all your application, when they will come out from kindergarten and will reach, let's say, 100 million users, they will need huge computing power infrastructure behind. Please come to us.
Okay, yeah, myself actually I welcome all the great idea because we're looking for the changes, try to change the world. So come to me. Okay, let's thank you all the speakers on the stage. So thank you all.
Thank
okay,
you, moderator.
Thank you.
And thank you for organizers.